Welcome back to The Explainer. All right, today we're tackling something you've probably seen 100 times, that super tempting offer for zero-fee crypto trading. We're going to break down what that really means, and you know the drill, it's all based on the source material. I mean, you've seen the ads, right? Big, flashy promises of commission-free trades. But let's be real, can you actually get something for nothing? Especially in the world of crypto. So yeah, that's the big question we're kicking off with. And look, this promise is how they get you. It's a fantastic marketing hook. The thought of buying and selling crypto without those pesky commissions chipping away at your gains, I mean, who wouldn't want that? It's a very intentional strategy to get a ton of users on board, and fast. But you gotta wonder, how does that even work long term? All right, so let's get into our first section here and start peeling back the layers of this whole thing. We're gonna look at the business model behind that so-called free price tag. And you know, the source material just nails it right here. The honest truth, a totally 100% free trading environment is, well, it's super rare. There are almost always strings attached. Maybe it's only for certain crypto pairs, or it's a limited time promo. There's usually a catch. Okay, now this is where it gets really interesting, because this slide lays out the whole game plan. Zero fee trading, it's often just a loss leader. Think of it like a grocery store selling milk for super cheap. They're not making money on the milk, they're getting you in the door so you'll buy everything else. Same idea here. They get you trading for free, get you comfortable, and then they introduce you to the real moneymakers, futures, options, margin trading. That's where they're cashing in. So if the free trades are just to get you in the door, how are these exchanges actually paying their bills? Well, in this next part, we're going to pull back the curtain and look at all the hidden ways they make money, even when they say there's no fee. And here they are, the real revenue streams, all laid out. And it's not just one thing, right? It's a whole mix. You've got the bid-ask spread, which we'll get to in a sec, but they also take a little slice of your staking rewards. They often charge you to move your crypto off the exchange. And of course, they collect interest when you get into margin trading. That's trading with borrowed money. Okay, let's focus on that first one, because it's a big one, the bid-ask spread. Super simple, really. It's just the gap between what buyers are willing to pay for an asset and what sellers are willing to sell it for. Even if the platform screams zero fees, if that gap is wide enough, you're still paying a hidden cost. And guess who pockets that difference? Yep, the exchange. All right, so theory is one thing, but let's see how this stuff actually works in the wild. We're going to put a couple of big platforms from our source material under the microscope and see what the real-world trade-offs are. And what this chart really shows is that there's no single best platform, right? It's all about what you need. You've got MXC, which actually does offer 0% fees on spot trades and has a mind-boggling number of coins. Awesome if you're hunting for those hidden gems. But yeah, it can be a bit much for a total beginner. Then you have Bybit, which is like a high-performance engine for serious traders. It's incredibly fast with tons of liquidity. The downside, it's definitely not for the faint of heart. There's a serious learning curve there. Whoa, let's just stop and look at that number. 100,000 transactions per second. That's the kind of power we're talking about with a platform like Bybit. And for a serious trader, this is everything. Why? Because when the market goes crazy, the last thing you want is your platform to lag or freeze. That's speed and reliability. Honestly, that can be worth way more than saving a tiny bit on a trading fee. Okay, so we've got all this info. What do we do with it? How do you actually trade smarter? Well, this last section is all about creating a strategy that goes way beyond just looking at the fees. Think of this as your personal pre-flight checklist before you choose an exchange. Seriously, before you get dazzled by zero fees, run through this. Is there high liquidity? That's just a fancy way of asking, can I sell when I want to without the price tanking on me? Because price slippage is a real thing and it can cost you way more than a fee ever would. Then you've got the big ones. Is it secure? Is it regulated? And maybe most importantly, does it actually fit your skill level? Be real with yourself on that last one. And really, this is the main takeaway. The smart money isn't just chasing the lowest possible cost. It's looking for the highest value. It's about finding that sweet spot, balancing the allure of zero fees with things that actually matter, like security, reliability, and whether the platform even has the stuff you want to trade. So as we wrap this up, I want to leave you with this one thought to take with you. The next time you see that big, flashy zero-fee ad, don't just ask, is it really free? Instead, ask yourself, okay, so what am I really paying for here? That's the question that'll make all the difference.